All right, folks. Today we're talking with David Morgan. David Morgan is the author, publisher, and economist at silverinvestor.com. He's written a book called Get the Skinny on Silver Investing. I actually have the book right here in front of me, and it's a great read. I suggest you pick it up if you want to learn anything about the silver market and are looking to invest in silver in any form, either the stocks or physical metal. Uh, as I mentioned, he writes the Silver Investor, also known as the Morgan Report, and the website is silver-investor.com. He's been on CNBC, Fox Business News, and will be speaking at uh, two times at the World Resource Investment Conference, May 26th at 8:30 a.m. and May 27th at 6 p.m. You can find information on that at cambridgehouse.com under the events tab. David, I want to first thank you for being with us today, and I appreciate you being on the show.
Well, thank you very much for having me. It's great to be with you. I just want to make a slight correction to the next Speaking Investment Conference, which will be the World Resource Investment Conference. It's in Vancouver, British Columbia. And the times you gave were actually the times of the show. And the show is on May 26th and May 27th from 8:30 a.m. to 6 p.m. both days.
Okay.
I forget my keynote, but I think it's a second day, and I think it's at 1:30. But you can check the website, cambridgehouse.com, all one word, cambridgehouse.com for more information.
All right, we'll just dive right into the questions. My first question I had has to do with the spot price on the exchange and what a customer pays when he actually purchases physical delivery. Why is there such a difference in those prices?
Yeah, it's a great question, and most people don't know it unless they are metals investors, and even some metals investors don't really know the answer to that. It's pretty simple, but the spot price is what you pay for in the paper market. In other words, if you are on the futures exchange for the Chicago Mercantile Exchange, the COMEX, the Commodities Exchange, and you see a price of, for example, $24.10 per ounce for an ounce of silver, or $1,412.50 for an ounce of gold. That is the price that you would pay for a commercial bar, which for silver is approximately 1,000 troy ounces, and for gold is 100 troy ounces. When you locked in that contract at those prices I just stated as an example, if you were to take delivery off the exchange for the physical reality rather than the paper fiction, what you would find is that it was the price you locked in at plus a couple of fees and transportation costs to get delivery of the metal. So even the spot price is nothing more than a lock-in price. And if you want the physical reality, not the trading contract, you would still have to pay an additional slight amount. It's not much, but the slight amount more to get it. But let's get more practical and let's look at what someone has to pay when they buy, let's say, a silver eagle or a silver medallion or a 10-ounce bar or a 100-ounce bar. What that entails is that somebody has bought a 1,000-ounce bar or several 1,000-ounce bars, such as the U.S. Mint, and they have taken the time to melt it down, extrude it, pull it into a certain shape, stamp it out with a machine, take the edge and knurl it so that it's perforated on the edge, and then they have transported it to a mint to be pressed out with the design, and then that's further transported and all that. So basically, you're looking at the spot price, then you have to look at what goes on from that 1,000-ounce bar form. And what you have to do is you have to manufacture it. There's labor involved. You have to do the die design, in other words, to make it into a coin or even into a bar. There is some work that's done for the design and also the transportation labor, et cetera. And then there's advertising costs on top of it. So if you add all that, the manufacturing, the labor, the die design, the electricity used, the labor, the transportation, and the advertising, you can see why you would get a price that's greater than the spot price. It's cost. It costs to manufacture something from a great big lump into a coin you can hold in your hand. Going a step further, because I think it's implied in your question, is why is the amount such a huge amount right now while we're doing this interview in the middle of May than it might be on, let's say, a few months ago, where the spread between the spot price and a coin might be 7% or so, and now we're looking at a much greater premium. And the answer for that is supply and demand. There's a huge demand for retail product, which again is your 1 ounce coins in any form, be it privately minted or official government mints, your 10 ounce bars, your 100 ounce bars. There's a lot of demand for both gold and silver. And because of that demand and the amount of supply, meaning the amount of supply in that form is very, very tight, people are willing to pay up a higher premium. This happened once before in the 2008 financial crisis. We're seeing it again. And the question always becomes, is this a short squeeze that everybody is forecast? Will this continue? And the answer is, truthfully, no one knows. It's my belief that it is not going to continue a lot longer, maybe a few more weeks or so, and I think it'll subside just like it did in 2008. Unfortunately, I love to see this be the real thing and the physical market takes over the pricing mechanism, but I don't think we're there yet. And the reason I say that is I've done a great deal of research and contacting the commercial side of the business, meaning the 1,000-ounce bars, the refiners, the smelters, primarily the refiners, that are the ones responsible for shipping the 1,000-ounce bars of silver and the 100-ounce bars of gold, or 400-ounce bars of gold. That's the true commercial form for gold around the world. And it appears, from what I've been told, that there isn't a shortage yet in those products, particularly on the silver side. So school's out on that. Lastly, I would like to mention something that I came across a couple years ago, and that's this website, silver123.net. That's silver123.net. That's a dealer that I know very well that produces or has silver available and gold, platinum, palladium, whatever the precious metals may be, at a markup that's in line with some of the best dealers. It's available to all Canadians and all in the United States of America. And it's a way for people to buy, again, at a low premium. And also the advantage is that if you want to, you will get an affiliate code and be able to use that to sell silver yourself to your friends or family, or start a website or a web page or whatever. So rather than spend all the costs on advertising like a lot of websites do, what this firm does is they allow the participant to, it's not a multi-level marketing deal, it's straight up one fee only. In other words, if you buy from an affiliate, they get a slight amount that would normally go to the advertiser, and that's it. There's nothing else involved. So you reap the rewards of your own efforts, period. Nobody else does.
Well, I'm glad you mentioned the Silver 123. I've looked at that site before, but I did not know they had that, so I will definitely look into that on a side note. And I appreciate you explaining the difference between the retail and the commercial market, because I did read that in your report, and I wanted to get that out to the listeners who are unfamiliar with that. I noticed also in your latest report that you had mentioned sort of a collusion in the sell-off of the paper market, and it's tied to its suppression being tied to the currency wars. Could you explain first what you mean by paper market to the listeners? And then secondly, could you give some information on this collusion and who the possible suspected players are?
Sure, I'd be happy to. As far as the paper markets, what I mean by that is any derivative to do with the precious metals. And that would entail plenty of things, but the major ones would be the futures markets. Again, we talked about the CME, the Chicago Mercantile Exchange, the COMEX, and there's the LBMA, the London Bullion Management Association. And those are your two primary derivatives producers. Now, there's producers of paper or fictional metal in the ETFs as well. So you've got the ETFs, the futures exchange, both in the U.S. and it isn't even an exchange, it's an association in London. And there are others. There's Singapore, there's Hong Kong, there's many markets that make a metals paper market. But that's what I'm talking about. It's a derivative only. Now, in some cases, the derivative can be turned into a physical reality. You can do it on the futures exchange with some limits. There are limits to the amount of silver or gold you can take off the exchange in a given month, but primarily that's the issue. As far as going into the second half of the question, the collusion is something that really cannot be proven. You can certainly look at the price action that took place on the 12th and 15th of April. The reason for it, in my view, is that it's the most contra known investment to the currencies of any government entity, and especially the U.S. dollar as it's the reserve currency of the world, is gold and silver. They are money that have stood the test of time for thousands of years, really. And every time we get into a problem, meaning the world from a global perspective or even a nation state perspective, we find that as the paper deteriorates, the price in paper terms goes up for these metals. And that's what was happening. It still continues. So I think it's a psychological thing primarily to knock down the consciousness of people that are waking up to the fact that paper money actually destroys their wealth and gold and silver preserve it, by making a move such as this that was obviously huge in nature because of the amount of participation. In other words, the volume that was involved, and also the price structure, how far it went down, is again something that causes people to maybe pause and say, geez, I thought gold might be safe, but look at what happened to it. It went down so much, I don't want to touch gold. It's a risky investment. When actually the contrary is true, but in a day-to-day basis, certainly the price has been knocked down. I'm not going to argue a fact. What I am going to argue is that the psychology behind it, if indeed I'm correct, and this is my opinion, it does go a long ways to provide the climate for investors to think differently and maybe, well, I wanted to go into the gold market, but now I want to go into the stock market. The stock market's moving up, things are getting better, and all the things you hear primarily on the mainstream press, people start to buy into that. Whether it's true or not, the market is going up and the metals are down. And so, again, an investment that might have gone to the metals a month or two ago is now funneled into a different direction. So I think that's part of it, is a distraction technique. As far as who's responsible, it's very simple. The central banks work primarily with bullion banks. Bullion banks are what's known as investment banks, and there's really only 6 that work in the gold industry, and that's Barclays, Scotia-Mocatta, Deutsche Bank, HSBC, JP Morgan, and UBS. So those are the players. What's interesting, if you look at the LIBOR scandal and setting interest rates, a lot of those same banks I just mentioned, it seems like at least the LIBOR scandal has been routed out, you might say, as far as what's going on in the silver market in real terms. We don't have time to go into that story, but anyone who wants to look it up can look at silver manipulation on Google, and you could probably read for the next 3 or 4 years. But regardless, those are the banks that are considered bullion banks, which are investment banks. They have the commercial side of the market and primarily work in the derivatives sector, meaning they have tons and tons and tons of paper that do not really reflect the true state of the physical metals markets.
Right. Yeah. GATA does some great reporting on the manipulation of both the gold and silver markets. If anybody wants to look at that over the long term, what do you see for the metals markets, particularly silver?
Well, over the long term, and of course we've already been in the bull market for probably 10 years for silver and 12 for gold, I see the prices higher. And really, when you think about it, an ounce of silver, an ounce of gold doesn't change. I mean, the physical dimensions and the mass stay the same. It's a constant. In fact, that's what dollar's definition is. A dollar is a weight. 371.2 fine grains of fine silver is a weight of silver, and that's what a dollar is defined as. Regardless, what do I expect? I expect higher prices. So what does that really mean? What that really means is I expect continued depreciation of the currencies at hand. Not only the U.S. dollar, but the Japanese yen. We've seen the first flurries of the end, or I say further indications of the end. I think the end is fairly clear that those that understand the monetary system. But the bond yields for Japanese government bonds have started up 26 basis points here recently, which is a huge move on a percentage basis. So we're starting to see these things fall apart. But it happens slowly over time. Most people don't recognize this. Most people don't understand it. Most people don't have any concept of economics or monetary theory and reality. And so they just go about their daily business, basically not knowing any better, that really there's some really powerful forces that are taking place, that have always taken place in a market that's basically based on a lie, and that is that you can print wealth, and you can't. But again, that's starting to unravel further. So I see more of that happening, more depreciation of the currencies, again on a global basis, which portends higher prices in paper terms for both gold and silver, especially silver. And the reason for that is it's a smaller market, it's more affordable. And as things continue up in price, you're going to see more and more people say, oh my goodness, gold's over 2,000 again, or 2,000, and I can't afford it, or 2,500, or whatever their price point is. I'd love to buy gold, but it's now, $2,500 an ounce. I rather put my money into silver. It's cheaper. And so there'll be, in my view, and this is what happened last time in the last bull market, more and more people waking up to the reality of what's going on in the monetary system. And they will seek refuge, and they'll find refuge in gold, but they'll probably move into silver because it's more affordable. So I think silver will actually have the biggest move on percentage basis than gold when we get near the top of the market.
Yeah, and following up on that, is there, from what I understand, silver has the added benefit of being not just a commodity, but a industrial metal as well. So it has a bunch of different uses. And if I'm correct, and correct me if I'm wrong, there is actually less above ground silver than there is gold. Am I correct on that?
Well, a couple questions. I'll answer the second one first. The above ground supply of silver is probably bigger than the above ground supply of gold in the element form. In other words, just AG. If you look at the periodic table, okay, yeah, there's more silver above ground. But in investment form, all investment form, meaning commercial bar or any retail product, 100-ounce bar, 10-ounce bar, silver coin, junk silver, any investment form you want to name, it is far less in silver than it is in gold. Okay. So if you're looking at, silver plate, or silverware, or some art objects or religious objects, and you combine all silver forms, yeah, there's more silver than there is gold. But when you look at investment form only, which is primarily what we focus on, because even though you can make the case that there is more silver, and I'd say probably a lot more silver than gold if you looked at all the elements, most of it is not an investment form, and it would take too much energy to get it into investment form. In other words, there isn't a great hoard of silver out there in a form that's not investment grade, that's waiting to pile into the market to suppress the price. That happened, and that happened. It's probably a one-time event in the 1980s. I don't think that's going to happen again. There's just not that much that's in that form that's really reliable to get to a smelter and take care of a huge spike in price.
What are your thoughts on benefits of silver versus gold as an investment in the long term?
Well, I think they're both good investments in the long term. I think gold will preserve your wealth. I think silver will make you wealthy. That's basically as simple as I can make it.
All right. Also, I guess this is the last question I have here. What will we ever see a currency backed by silver or gold again, as opposed to the fiat currencies we have currently?
It is possible, certainly, that gold would probably be reinstituted to back currency at some point in the future. It could happen. I think silver is unlikely to be used as a monetary metal again, although it could. I would certainly like to see it. But you also have, some implementations of it out there that aren't really currencies but could be used as such. As much as I'm not favorable to most of the silver and gold ETFs, they do exist, and basically it's a paper certificate that's purportedly backed by silver or gold. It depends which one we're looking at as far as what I believe are really truly backed without unencumbered gold and silver. But that is basically a paper form that is backed by physical reality in some cases that could be used as a currency. In other words, you could sign that certificate over to, let's say, a mortgage company if they're willing as a payment or something like that. So it is, that would be a bit cumbersome, but certainly it is. It is possible, but coming back and not being so esoteric, will it become part of the monetary system again? I think it's inevitable. I just don't know when exactly it is. And your other question that we were talking about was the industrial use of silver and how does that play into the demand side? And I like to equate it to a stock buyback program. I mean, if you have a stock like, let's say Apple Computer, it's been beaten up lately, I think, as we all know, for investors. But, when a company has a balance sheet and they have a lot of cash, they often will buy back their own stock. And the reason being is they don't see any other use for that cash that's more beneficial to themselves than buying back shares in their own company and making it a tighter float. In other words, extinguishing some of the shares. Silver has about a 50% buyback ratio, meaning that about 50% of the total silver market on an annual basis goes to industry. So that's like a stock or a company that's buying back half of its offtake or half of its float every year. And then if you add investor demand on top of that, you can see that the investment side is what really controls the market. So the industrial side is something that varies slightly. Some years is greater than others, but roughly you got a buyback program going on. So I like to think of it in those terms. I am, biased towards silver. I love gold. I think everyone should own gold. I think people should own both metals, gold and silver. And I think the ratio depends upon what your expectations are, what your belief system is, and what you really want out of the markets. If you really want to just preserve your wealth, you probably would favor gold. If you want to shoot for the fences, I think you should include some silver in your portfolio.
Right. And when I was asking the question about currencies, it dawned on me that there are something, not a true currency, but there are several forms. In fact, I think you have one. It's a metals debit card where it's tied to a bank account, if I understand correctly, and you could either use cash or metals to pay for bills. Could you expand on that a little bit?
Yeah, it was a feature article we did in the Morgan Report for May, and I don't have time to go into all the details.
Sure.
But yeah, it's a metals-backed debit card, and it can be any precious metals, gold, silver, platinum, palladium, or a combination thereof. And you can also fund it with cash or both. And what it allows you to do is just use metal in a transaction or cash in a transaction. So the way it's set up, I think, is rather simple but very easy to understand. If you put in $1,000 in metal and $1,000 in cash and start using your debit card, you are automatically going to debit the cash side unless the metal is at a higher price than where you started. So for talking purposes, let's just use a round number again of $1,400 gold. Let's say you put in $1,400 gold and the price is below that, you would be debiting off the cash side. And so it's kind of a cool way to do it. It's transparent to the merchant. In other words, if you're at a major chain store or bookstore or off the internet or wherever using a debit card, doesn't matter. You're just paying for it, and the person selling you whatever you're buying has no idea that you're debiting off some portion of metal to pay for that transaction. I think it's really about the only way to re-implement metals back into the system, because the idea of putting coins on the counter and getting change is rather tough, because what do you make change in? The price varies a lot, whereas with the debit card, you're just locking in that day's price. It's on a certain fix at a certain time of the day. It doesn't vary, and all this is disclosed to the people that are participating in this form of payment. And it's very simple, very elegant, and also very much in the mainstream, because this is the way most transactions are conducted in today's world anyway.
Yeah, I thought it was pretty neat when I read about that, and I just figured I'd bring that up and let the listeners know. Well, David, I appreciate you taking time out of your busy schedule today to speak with us and expound some of your knowledge on the silvers market and the metals in general with our listening audience. Is there anything else you want to say before you go?
for those that are interested in following our work, there's a lot of free information. So the website silver-investor.com. Scroll to the bottom and get on our free email list. Once you're on our free email list, you'll get the 10 rules of silver investing. Those will come out about every couple of days or so. Somewhere in that, I think around day 7 or 8, you'll have an opportunity to get the Morgan Report for free for 30 days. It's something that some people take advantage of and some don't, but it's a way to get deeper into our work for a free trial. Secondly, there is a YouTube channel called Silver Guru where all the interviews that we do like this one will be filed on that website. So if you don't have time to listen to it live or you want to catch up on your way to work or whatever, you can go to our YouTube channel, Silver Guru. And lastly, articles that I think are very pertinent to the current economic conditions and the metals markets are posted by me or one of our staff at Twitter. And that's at SilverGuru22, and that's our Twitter feed, at SilverGuru22. So we have Twitter for free, YouTube for free, a free trial for the Morgan Report, and also a free e-letter that comes out once a week. And that, again, is available at the website, silver-investor.com.